Five, four, three, two, one. Hi, everyone. Welcome to another episode of the Tech Behind FinTech. Really excited today. Our show is how DLT blockchain technology is revolutionizing fintech. I'm extremely excited for our guest. Let me introduce you to Jyoti Ponnapalli. Is a DLT technology strategist and is the founder of Bloqchain Solutions, a certified women-owned small business. A core area of her expertise is in digital supply chain transformation, fintech using blockchain DLT that include Hyperledger, Quarter, and Ethereum. Depending on the project and client, she also acts as a product manager or technologist, providing insight around enterprise digital platforms, cloud technology, offshore team management, and MSP management. Welcome, Jyoti. Thank you for being on the show. It is exciting to have you here.
Thank you, Nnamdi. Honored to be your guest today.
Excellent, excellent. Let me just do some housekeeping and set up. Okay, it looks like we are live on LinkedIn. Just wanted to make sure of that. And one more housekeeping effort. Just want to make sure for some reason our names are not being displayed. So I just want to add that into it. But you know what? It's not happening. So we have to move on with the show. That is the platform that we're using. Oh, look. So here's what we're doing right now. So we have our first comment before we jump into our news.
Mm-hmm.
Where is she from? USA or where? Yeah, Jyoti is currently in the USA.
Yes.
Yes. All right. So currently located in the USA. So before we get into it, right? Let's understand the connection. Jyoti and I are part of Cloud Security Alliance, and I'll let you explain what Cloud Security Alliance is, and we can go on the projects that we're working on and the research work.
Yes, thank you for that question, Nnamdi. And this is where Nnamdi and I met under Cloud Security Alliance umbrella, which focuses on a broad spectrum of emerging technologies in the cloud, but specifically where we concentrate our focus is on blockchain and DLT. Security framework working group that was formed to bring together financial services industry stakeholders in a mode of a consortium to interact and build together a potentially best practices, guides, as well as tooling in support of secure implementations of blockchain projects.
Yeah, so that's the project we've been working on. We've been part of the group for a while, DLT longer than myself. And currently, we're working on a DLT, like she said, best practices actually around the financial industry. My subgroup is around smart contracts, and we're going to get into all of that in our discussion. So if everyone's familiar with how we usually do the show, we pick a news article that's relevant to our topic. We get into that, and then we get into our topic of the day. So the news article we're going to talk about today is around Bitcoin. So Bitcoin recently dropped 11% after reports of a critical floor called a double spend. And that report was reported by BitMEX Research. They're a cryptocurrency exchange. It's important to note that it turned out that was false. That was not accurate. Still, with the news, Bitcoin fell 11%, and obviously that impacted the price of other cryptocurrencies around. So just want to, and a couple of things before we jump, I jump into Jyoti's comments, but BitMEX is a peer-to-peer crypto exchange, but it's not actually, I think it's banned from being used in the USA. USA citizens, they're suspended from trading on that platform. So I find it interesting that their research, just by putting that out on Twitter, impacted the Bitcoin price. What are your thoughts on that?
So I would not necessarily attribute Bitcoin's price fluctuation to that message. Number
Okay.
one, BitMEX is not a registered exchange in USA. And number two is that since for the past 2 months, we have seen very many political, economic conditions changing in the market. And so there may be various attributions to the fluctuation of Bitcoin from a price standpoint. So I wouldn't necessarily attribute it to that one message or a false message on double spend. But let me just clarify that by saying that it's not a double spend. That's exactly what the white paper also references to by Satoshi Nakamoto. It says that so the way the confirmation of the blocks happens is it has to be 6 blocks after. So if there are two transactions that have been simultaneously submitted to the chain, and it's very much likely possible that two different mining tools are working on the same transaction, and if they happen to submit 2 blocks at the same time, let's say A and B, regardless of which one makes it into the chain, the next 6 blocks have to reference to the maximum number of times to a single hash of the previous block. So just to reconfirm on that, the double spend did not occur. It's not a double spend at all.
Yeah. So no, those are great points. I know that the concern is, I mean, but the same thing happens sometimes with stocks, right? You have companies that want to pump up a certain stock. It could be a lower one, and you see all the marketing news, but it may not be based on anything tangible. So no, that was one of the interesting news articles. There's a lot to cover today around blockchain, and one of the reasons why I wanted to do this particular topic today is because yes, the cryptocurrencies, everyone's seeing the record-setting high price of Bitcoin, and we talk about Ethereum and other things. But it's also important to note that blockchain has utility functionality outside of just the crypto currencies that's mainly publicized. So we really wanted to get together, do this show so we can kind of talk through that and look at all of the possible use cases specifically around fintech. So before we get into that, let's just do some definitions for those in the audience who may not be familiar with blockchains, or they just know about Bitcoin or different currencies, but the technology behind it, they may not be as familiar with it. So we can just go over that from a basic point. We could chime it together, like what is blockchain?
Okay, so you can't disregard the fact that Bitcoin was what did bring blockchain into into its forefront and made it what it is today, right? But blockchain is the underlying technology on top of which Bitcoin sits. Bitcoin is a cryptocurrency, and that's only one aspect of it. Blockchain is the technology that could be manifested to incorporate multiple different use cases and brings about a potential value to the industries, various vertical industries, not just for financial services, a kind of value that hasn't been tapped into yet and hasn't existed, to be honest. So it is a coming together of various forces of technology that has created this new magnitude of possibilities that the world is still, trying to find its way on. For since the enterprise blockchains have been come into its force, into its effect, which is like beginning with Ethereum and Hyperledger, to be two of the most widely adopted platforms, at least in North America or in Europe. um, the possibilities of enterprise blockchain solutions implementations on top of this technology have widened far more. It may or may not necessarily involve a cryptocurrency. So does not always have to be a representation of a monetary value, but it can be a value representation of an asset. So what it has created today is an opportunity to digitize an asset. An asset can be a physical asset, a monetary asset, a currency, or could be anything else for that matter. So the concept of blockchain, as it was introduced as a part of cryptocurrency, has now paved its path into enterprise solutions, into various vertical industries, and it's finding its value built upon the use cases, as we will discuss shortly, I'm sure.
Yeah, no, thanks for that, and that those are great points. That obviously Bitcoin started really the blockchain and everything came about. It's important to note also, as Jyoti starts talking about other use cases, it's something called a smart contract. So that really came about with the launch of the Ethereum blockchain, and that's essentially a self-executing contract with terms and agreement, but it's in code form. So like a program that's deployed on there. And the advantages to that, because now it opens up a bunch of use cases in which now you have an actual application on the blockchain that can execute without actually human involvement, right? So just something happens and then something else is a consequence of that, or something else transacts. So the use cases and potential opportunities for that totally endless. With the whole self-executing contract idea. And one more definition I want to get into, because it's going to help as we start talking about use cases. It's a definition of an oracle. So imagine the smart contract that we talked about, but now it's interacting with something in the real world. Something, it can be the weather, it can be the market, something that is basically calling upon in the real world and getting data from that's constant. So it's a real world occurrences that happen with that. And please, anytime we're talking, please feel free to chime in with questions and so forth. So now when we're going into potential use cases around within fintech and the blockchain, let's get into payments. That's like a big thing. Worked at various financial firms, and sending money over to another country across the border was always it's a problem. I mean, it's not always, it still is, right? Like, you have companies like Swift and so forth. And, in terms of time from when it's actually sent to when the tangible fiat currency is in another bank account can be days or a week. In terms of the transaction cost now, that it could be anywhere from 5 to 20% depending on the region. What are your thoughts around that in terms of how blockchain can assist with that, the blockchain technology?
Right. So let me begin by saying that the pace at which the financial services industry adopted blockchain and has been aggressively pushing forth on whether it's POCs or evaluating of the use cases, payments was one of the first use cases where the value was right there, right? I mean, the value was very obvious. The reason being is just to the point, like you mentioned, cross-border payments or payments in general, where we have multiple intermediary agencies that could be banks or Swift or PayPal or any one of these, monetary agencies there was a dependency on these intermediaries, right? What blockchain created is an opportunity where two parties can interact with one another without the presence of an intermediary. One, that cuts away the transaction costs that both the parties have to incur for making a payment across each other. And the other aspect is the time it takes for a transfer to occur, depending upon where these parties are physically located. That physical proximity did factor into the time it took for a payment to be cleared and settled. Now, what blockchain has created is an avenue where two parties can transact, share, send across payments without an intermediary in place. You can just imagine the possibilities of that the potential, for how, timely, and the amount of savings is only in billions of dollars every day, just in that one sector.
Look, I mean, just a real world scenario. I was working with someone, I still am, and they're located in Kenya.
Mm-hmm.
And, I think when we're all located in the US and you're doing business with people in the US, you take for granted how difficult it is to send money to someone in a foreign country. Just for a plethora of reasons. And even when I'm not going to mention, the platform we use, but even when we try to use this platform, on my side, it was great. But his side, it was like, oh, we don't know if this is a legitimate account. Oh, it could be a fraudulent account. And the work he accomplished was done. And I literally we were trying to figure out various ways to him to get compensated. He eventually did. But, obviously, we both use some sort of crypto and we're familiar with it. But when you do these payments via crypto or whatever, the speed, it's instantaneous.
Mm-hmm.
The whole, that regulatory branch, that whole, and I understand why those platforms have to go through that because of fraud, because of KYC, your client and stuff like that. But just the ease of to quickly send money was amazing. So now when you put that on the enterprise level now, the use cases that you pointed out is endless, right? Because that's just, right now, that's a lot of P2P, but on the enterprise level, it gets interesting. I mean, you have companies like Ripple, that's the promise with them. I mean, and it's important to note that, obviously XRP, we talked about that a few weeks ago with the issues that they're facing on the security side, but that's different from the business function of Ripple, which is the whole idea of cross-border of payments to work with the different banks. The next topic, in terms of innovation, and I don't know if we're there yet, but stock exchanges, right? Obviously, we have crypto exchanges, whether you're using Coinbase, whether you're using, what's another one? Bitstamp, you know a couple. What's the Binance? Yeah. There's a plethora of one. There's a scenario in terms of the real-time settlements involved. So in general, when you buy a stock, I think it takes T plus 2 days, they say, for the shares to be sold. You might see it instantaneously, but there's a lot of behind the scenes things that's happening for regulatory approvals, operational things you have to do, and mandatory clearances. Yeah, okay. Man, we have a comment. Yeah, Binance. That's one. I use Coinbase, Binance. There's just so many of them. I use I don't use Binance, but that was the one. Thank you, Amir. Appreciate that. Now let's see what another comment we have from Boulevard. Crypto asset exchanges. Boulevard's another person in the Cloud Security Alliance with us. Yeah. So, what are some use cases around that? Like, do you see in terms of stock exchanges? I mean, right now there's plenty of them, right? That we use online, whether you use a Merrill product, a TD product, a Morgan product. What do you see with blockchain?
Okay, I would like to address that question from a consumer standpoint.
Okay.
The benefit of it, and that itself will validate or prove the magnitude of an impact it could do, right? Fractionalization of an asset, and this is one of my favorite aspects of blockchain that actually proved it to me that this technology is here to stay. I've been around quite a few years now in blockchain, and I've lived through the hype cycle of whether this technology will sustain itself as an emerging technology and sitting at a cusp of this immense amount of possibilities. The ability of a blockchain to fractionalize an asset creates enormous amount of possibilities. Like, for example, you take a stock or a valuable asset like a cup or a painting of a piece of art. Previously, you could only associate or attribute one person as an ownership to that asset. But the ability of blockchain to fractionalize that asset into multiple units creates a potential for new markets to open up. So, for example, let's say an Apple stock, and or any other major company stock that sits at $1,000 per share. Previously, you had to, if you wanted a part of that, part of ownership of that company, you had to at least start with one unit, which is as much as the stock cost. But the ability to fractionalize means you could technically make that one stock into 1,000 units. Now imagine the possibilities it opens up to that spectrum of population which could not have entered into the market previously. Now it opens up a doors. Real estate, fractionalizing a home or a resort or a hotel, or so then now it opens up possibilities for that set of the population which was previously unable to afford or enter into the market because of cost as a barrier. Now those barriers are being overridden because of the possibilities of this technology.
Let's dive into that. In terms of the fractionalization of an asset. I mean, because we think about, even in real estate, right? You have even some companies now that say you join them and you don't have to buy the entire house. You buy a portion of it. So you become like an investor in that. But now, in taking it from the blockchain world, what you're saying, it can be a stock, it could be a car, it could be any tangible asset. And I think it's a term that I came across from that, and I think it is called. Let me see if I wrote it down. The actual term itself, and it is security tokens, right? Mm-hmm. That's the concept around that fractionalization of an asset. So no, that's definitely interesting what you're saying. It seems like we have what we always like. We have some audiences chiming in with some stuff. I think we posted to Kraken. Yeah, Kraken is another crypto exchange. Thanks for that, Amir. Appreciate you. I haven't heard of Shapeshift. Have you heard of that before?
They're not based in USA.
Okay.
So there are many. Coinbase is one of the most well-known exchanges in USA, primarily because of the insurance they provide. But there are many other exchanges around the world. USA has been one of the more challenging markets to penetrate, historically.
I'm assuming that's because of the regulatory bodies involved.
Right. That's because of the regulatory bodies.
So let's say, so what's Amir saying? Blockchain is being used as a technology in financial institutions, but from what I've seen, for accountability and shared transparency as well. Trust. Okay. Do you want to get into that, Jyoti?
Yes, absolutely. And that goes without saying, right? One of the basic facets of blockchain is the immutability, the nature of immutability of data. So I try to picture it, like this. Previously, when two entities or two companies needed to transact with one another, there was always a middle medium, or either an intermediary, or the data could not be transacted in real time, right? So let's say, for example, classic ERP, where companies for decades have relied on EDP, data exchange. EDI, sorry. But it was supposed to be a common standard for data exchange. But from what I know, the only three letters that are common in EDI are EDI, except every company had its own terminology, had its own classification of data, so that the amount of data that was being on a nightly or whatever frequency of the cycle that the companies wanted to exchange, information happened, was not happening in a real time mode. And what it did was those were monolithic architectures. What blockchain gives you the ability is to be able to come beyond corporate borders and transact with one another on a single platform, because it gives you, number one, trust, number two, trust because of immutability, and the transparency it creates into each other's data. That is how the networks are designed. So now you're rising above the corporate boundaries, in some cases country borders, or so the borders are slowly collapsing, which previously existed for data transactions. And as the borders are collapsing, companies are able to gain that transparency amongst each other, and able to transact with trust even when parties do not know each other personally, because of what the technology establishes as a feature: trust, immutability of data, and transparency. So, definitely, accountability and reconciliation are the first challenges it addresses as an aspect of providing trust on a platform and transparency. So,
No,
yes, reconciliation, accountability are two of the basic outcomes of the technology from its get go.
not excellent. And no, that's a great explanation. Thank you for that. Next one. So from Brett Payton. So fair to say will establish financial equity in underrepresented markets or populations. I mean, of course, for sure. As Jyoti just mentioned, right? I mean, the ability that we can now transact in this using this technology from far-reaching places of the world. Thinking about a farmer in Kenya, or that wants to sell his goods, right? You can go direct to the supplier now, utilizing this technology. So good point, Brett. Thank you for that. Do you want to add anything to that?
Yes, it's absolutely fair to say that the potential is out there. Now, the markets have to move in that direction and be able to, in support of those initiatives. And there is definitely a possibility for a fair trade to happen across all sectors of the population.
So we have another comment, and then we have, I think Boulevard answered the question. Can you talk to expiring contracts later? Example, now Bitcoin traders have turned their attention to 60,000 Bitcoin options that are due to expire. And then let's see, I think Boulevard just answered that, and you could jump into that. Guy, security professional, Bitcoin dominated futures contracts do expire based on dates agreed upon. I mean, I think that goes is similar to like regular option contracts that expire. I'm not as familiar with that. Jyoti, do you have anything to add to what Boulevard said?
Cryptocurrency is not my expertise either, so I would refrain from it.
Yeah,
Yes.
so we could refer to Boulevards, but based on how options work, I would assume that it has some sort of contract date. All right, no, good stuff. All right, let's jump into another use case. So we talked about. I mean, that was a good segue into the security tokens, crowdfunding, right? Now, and it's the same concept. We don't have to go into that because I think we covered that with the security tokens. So we're going to jump into syndicated lending. So syndicated loan, right? It's basically financing offered by a group of lenders referred to as a syndicate who work together to provide for a single borrower. And that borrower could be a corporation, a large project, or a sovereign government. So right now, with that process, companies coming together for a cause, which in this case, the lending capital to individuals, consider a bank can take up to weeks, if not months, dispersing loans, while the evaluation approach may be multi-pronged and lengthy. All financial institutions are ordained by government to authenticate identity and background. So the potential for blockchain around that is to the protocol would store user credentials. So it's not basically, it's more for identity purposes and so forth. Is there something you want to add to that, Jyoti?
There are a couple of things that are happening, to aid in that what was the use case we mentioned?
The syndicated loans.
The syndicated loans, right? So the reason the syndicated loans is an excellent use case to be built on blockchain is these multiple lenders have to come together. So previously, one of the the biggest challenges of procuring a syndicated loan for a large corporation or an individual. That's okay. Let me explain what a syndicated loan is. It's a large amount of a loan that one financial entity does not want to risk or wants to hedge the risk of a large size loan. So in that scenario is when they partner with multiple financial entities to procure to fund one loan, a single loan. So there was no mechanism, or there was no mature mechanism for these entities to come together, hedge their risk on a single loan, as well as help a customer or aid in a customer's procurement of a loan in a timely fashion. I'll say timely fashion because there's a lot of things that had to move around to make one syndicated loan happen. What blockchain gives you right off the bat is that platform, like I mentioned, where it takes away the boundaries, the boundaries collapsing across these financial entities, and also allowing for a customer to penetrate the platform in such a way that they are able to interact uh, unilocally with all the participating financial entities, and clear the loan approval process in an automated and timely manner, in an automated fashion. So syndicated loans is yes, definitely one of the most popular use cases on blockchain.
And there's a couple of points that you mentioned that's interesting to dive into. It seems like use cases where there's some sort of consortium, there's some sort of multiple parties transacting towards, whether it's they're all coming together to lend or come together with some sort of solution. The use case around blockchain is basically helping these intermediaries manage data, manage identity, manage some sort of transaction. I mean, when you start throwing smart contracts into the mix, that adds into it. So, and then within the financial industry, obviously there are different use cases where multiple entities have to come together. So, why am I going to, if I have my data somewhere, is it possible? Why do I have to give it to each and every single bank? I know companies like fintech companies like Plaid handle that from a fintech perspective, right? That you have your data protected, you could go anywhere now. But looking at a blockchain use case for that, if my data is secure there, why can't the entities just go there to grab it? How can I be verified? So that moves into additional use cases around that. Let's see what else we have to cover. So we covered, and I know that we're 3 minutes over. You know what? I want to jump into something around this term called the ecosystem economy. So basically, it's complex networks of company across industries that collaborate to provide seamless experiences to customers. The economic opportunity of operating an ecosystem is sizable and unprecedented. And I remember we had a company, I think it was Kaleido. They came on for the CSA and presented. From the numbers that they projected, they said that the ecosystem economy by 2025 is $16 trillion. That the potential in that market. Do you want to jump into that and like how blockchain? Because I know from their product they were able. And correct me if I'm wrong, because it's been a while since they came to present. But they can set up these types of consortiums with different intermediaries. You can basically set that up on like cloud providers like Azure or AWS. They have ways now you can set up blockchain as a service and coordinate. But on their platform, that's what they do. Do you want to talk about the ecosystem economy and the impacts in fintech?
Absolutely. So
Okay, cool.
let's dive into a basic definition of an ecosystem, right? It's a set of parties coming together to transact, share information, or sharing of assets or trade, whatever may be that aspect. An ecosystem previously was where every company transacted with each other, having those barriers in between. But when you start pulling down those barriers of entry and as well as ability to transact over the wall. Now you're creating a newer platform for the customers and the markets to come together and create a potential or a value. Now, example ecosystems, like, and this has been around for a few years now. One of the most popular use cases apart from cryptocurrency that brought blockchain into its foray was food trust, where Walmart was able to establish an ecosystem of its suppliers for greens, whether it is lettuce, spinach, or any greens, have them on a single platform. Now that's an ecosystem in itself, right? And what were they able to? The value that they were able to provide was in in the in the event of a contamination that occurs. Previously, it was millions of dollars of wastage of all the greens for every retailer because it took 6 days to locate the source of contamination. Having all the suppliers on a single ecosystem, on a single platform, cut that number of days down to 6 seconds, or 2 seconds rather. Yeah, it's 2 seconds.
Stop right there, because that's powerful. I mean, let's hear what you just said. It went from 6 days in that particular Walmart use case ecosystem, and to find a contaminated product with their suppliers to 6 seconds.
Correct. Matter of days to seconds. So
that's crazy.
If you have to comply by the FDA law, the moment a contamination was identified, FDA mandated that every retailer throws away every last bit of greens from their stores, regardless of who sourced it or from which farmer sourced it, what state the greens came from. Because they did not have that insight into the source of contamination in a timely fashion, the loss that every retailer took was millions of dollars, and it actually even went down to the farmers. But today, because they're able to identify the source of contamination, one, the food wastage is reduced. Two, the millions of dollars that the retailers or the middleman in the trade had to take, as well as the farmers had to incur, that is saved, as well as you're able to contain the source of contamination in a matter of minutes. Be able to go to the source of contamination. So imagine that the savings in hospital costs, the savings in life and death, the healthcare costs, retailer costs. So the power of this one ecosystem touches many, many facets of human life and industries simultaneously. These are the newer ecosystems, newer use cases, newer potentials that are being created on the power of blockchain as a technology. That sits at an infrastructure level, like at the base underlying layer of potential. So unimaginable amount of use cases and potential or possible ecosystems could evolve as humans, are able to come up with the value of creating a collaboration or a consortium of sorts to build value for each other, to bring value for each other. So will it be 6 trillion in 5 years? More than that, or less than?
It was expected. The number that they quoted, actually not 60 trillion. It's huge.
Right.
But when you start talking about that, and we start really getting into the use cases around ecosystems of potential, and then leveraging this type of technology to further promote that, right? Various parties joining in, and when you start looking at the knock-on effect, right, with the impact that it gets down to, whether you're talking about a multi-billion-dollar company like Walmart, down to the farmer in, I don't know, Nebraska somewhere or wherever, right? It's amazing. And then being able to trace that. So that goes into supply chain, that goes into various things. And that's only like local. When you start talking from an international level of products that we use in various countries, and being able to trace it literally from farm to table, the potential for that is very interesting in using it from an ecosystem perspective. I mean, I always look at the scenario, just on a personal note, like I mean, we had situations with my family's from Nigeria, property we might have owned, and then you go through. And I was always thinking, sometimes like, oh, this person wants to argue and fight over it in a court system, but if that information was stored, you buy it, it's stored. It's no disputing. You want to look up, I'm the owner. It's stored in the blockchain. Everyone has access to it. That level of transparency, and that's like one random example. And looking at use cases like that and how it'll impact the financial industry and other industries, I find fascinating. We can obviously keep going, and I have to be respectful of Jyoti's time. She's out here giving very useful advice and actually getting compensated for it. So she has to get back to her efforts. I want to thank you today for being on the show. I look forward to I mean, we didn't even get into Ethereum, Hyperledger, Quarter, and even some of the interesting things that we're working on for DLT and best practices in the financial space. And I would love to have you on, actually, continuously when we want to discuss, what do you call it? When we want to discuss more in blockchain. So I'm looking forward to having you on again. Like I said, I could stay 2-3 hours with you, just continue going, but obviously we'll save it for other episodes. So before we leave out, can you talk about your company, how people can contact you and so forth?
Yes, I have a contact information on LinkedIn, and you can also reach out to me directly on the email address or the number that was listed in the guest membership. Before parting, I would like to say thank you for having me on the show. Thank you. I really enjoyed. I'm happy to blockchain talk anytime. It's my favorite thing to do.
Because it's so funny. Like we do it. So just so everybody like we're like I said, we're doing our research effort on best practices around smart contracts and blockchain in general. So every week I'm talking to Jyoti on one of our calls that we have to do as part of our research effort. So I came up with this show a while ago just to because I talked to a lot of people like brilliant like Jyoti just in various forms, and I'm like, these are all people in fintech, and I want to have conversations that the public can get a little bit of a glimpse of what we talk about and bring them to light. So I'm definitely happy you came on, agreed to come on, and could come on that. So let's see what some more comments before you leave. Guy's back. He's saying drug farms, drug dealers are using crypto. Yeah, I mean, it's open for everyone, for sure. Thank you. I learned that. Thank you, Brett, for joining in. Really appreciate it. Have you both considered Clubhouse on iPhone? That would be great, but I don't have an iPhone. Somebody, a mayor above invited me as well. Do you heard of Clubhouse, Jyoti?
No.
It's a social network, but instead of typing, you're actually talking in different rooms and stuff like that. But I don't have it. I'm an Android. I'm team Android. So all good. But listen, guys, thank you very much for joining in. Jyoti, you have a great day and a great weekend. And thanks again. Okay.
Thank you. Thank you for having me on the show.
No problem. Cheers.
Mm-hmm.